question that I do get from folks when we're dealing with investments, because investments is the sexy part. Everyone wants to know, Mac, where can I get X, Y, Z? And this helps a lot when you're looking either at your 401k plan or you're looking at any type of investment you have. It may be real estate. A lot of folks will say, well, Mac, what's the best product? What's the best investment vehicle for me? And what I like to do is I like to share a risk quadrant. So this box here, folks, this is the low risk, low reward, right? Low risk, low reward. What kind of investments or financial vehicles do you think fit in that box?
Shoebox.
Shoebox. I would have also taken coffee can. Shoebox.
It's a regular savings account.
Money market. CDs, maybe?
CD.
Up in this quadrant is the high risk, high reward. What do you think fits in that quadrant up there?
Stocks.
Could.
Real estate.
What's it called? Options.
I heard options.
What's it called?
What's it called? Derivatives. Forex. Currency. Forex, currency.
Okay.
Oh yeah, currency's way out here. I'll put that currency. Okay. All right. So these other two, this of course is the low risk, high reward, which everyone wants to be in, right? Oh, Mac, where can I go to take no risk but get 50, 60, 70%? 2000 is gone. 97 is gone. 2007, all those times are gone. So there are things that do this, but I try to set my client's expectation with regard to what can fit here. And of course, here is the high risk, low reward, right? Also known as the dum-dum box. Because no one wants to take on too much risk and not get reward. If you come to me and say, Mac, look, I am very, 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 very risk averse. I do not want to take any risk whatsoever. You're going to be living in this box. But just realize that if you're living in that box, you're not taking any risk, but you're also not going to get very much return. Right? Conversely, if you come to me and say, Mac, I am super, 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 super aggressive, I'm okay. Well then, hey, you may belong over here. But just know, someone said stocks, someone said Forex, someone said different things. Gold coins even. See what's been going on with gold? Nice run up.
Yeah.
It's getting hammered, right? You're going to get volatility in there as well. Usually when I see people in this box is because their risk tolerance is not in line with what they own. All right? So that's one of the really, really, really important things to think about as you move forward, is making sure that whatever you own, I mean, real estate could fit into some of these spots. I mean, some people, if you're living in Houston and you're living in West Jew or anywhere inside the circle right now, I mean, real estate can be fitting in this spot right now, if you think about it. But if you are a person that's taking on a whole lot of risk, but you're not getting the reward based upon your tolerance, you could be hanging out. Okay? So, risk reward, when you look at anything, real estate, 401k, bank account, whatever. What I'm seeing a lot of nowadays, a lot of people sitting on cash in hopes that, something magical will happen with regard to the stocks or whatever. And I tell people, look, cash may be safe, but unfortunately you're not getting anything on it right now. The yields are terrible. And with inflation about 3%, you're actually losing money on your assets long term. Make sure if you're having cash, it's serving a purpose, and that purpose means short-term expenditures, emergency fund. You shouldn't have a ton of cash in a 401k plan right now, or any type of long-term asset, long-term account. You just shoot yourself in the foot. A lot more is in the book. The book is actually available on Amazon. It's also available on Kindle. It's $19.99. I didn't write the book to get rich. I wrote the book because I thought there was a big need for folks to have resource to turn to and not get intimidated by dealing with their personal finances. A lot of folks say, "Oh man, good." It's like Dave Ramsey, you can whomever. I don't care who it is that you subscribe to or turn to, as long as you have some sort of advice or some guidance with regard to how your money's managed, and it's objective, and the person who's giving you the advice is really trying to look out for you.